Hey guys, welcome back to another market update. It's now the 7th of May, and we've got quite a bit happening from Donald Trump, the Iran, we've got the peace deal, we've got SpaceX IPO coming out soon, and we've got S&P into highs, we've got Bitcoin bouncing. So let's quickly break down what's happening, how we're getting positioned, and things that we can expect. So first things first, we obviously have Trump that's saying Iran will be bombed at a much higher level if they don't agree to a peace deal. Now, if we just jump to my Telegram quickly, we can see that over the last couple of days, I've just been updating everybody based on what's been happening, based on themes, what it means for your portfolio. And I basically broke down the US pausing the Project Freedom in the Straits of Hormuz after some progression in Iran talks. And we saw that the pressure this had on oil, we saw the pressure that it had on energy stocks like XOM and CVX. And now we obviously had lower inflation fears. It was good for stocks, airlines, and consumer spending. So for now, energy winners had a great run on high oil. Taking partial profits, I think, was a good idea. So that's why now just recently we saw a strong surge in the price of oil. If I just jump to the charts here, we can see the price of Brent. If I just jump there, remove that, from $112 now back down below 100. And that's obviously now in anticipation for this peace deal. So if you guys aren't in this Telegram and you want some updates in terms of what's happening, how to adjust your portfolios, the link is in the description and in my bio. In terms of, and I think how to get positioned based on this sort of macro narrative is we want to see the response from Iran now. Does Iran come back in the next 48 hours and agrees to the peace deal? Or are they going to stand firm and we're going to see a more back and forth from Trump? We're going to come in heavier with the drones, the missiles, and I think that's going to have a pretty strong impact in terms of the markets right now. I think in terms of just looking at the VIX, we can see that there isn't much fear in the market right now, which is quite ironic. You would have thought that maybe with the war going on and all the tensions that potentially the VIX might be at highs. And for the guys that don't know, the VIX obviously measures volatility. And if we just compare the VIX at the moment to the S&P 500, I mean, this can also be a strong indicator, a basis of inverse correlation that when there's fear in the markets, we can see the S&P taking a tumble. And of course, when fear is low, that the S&P tends to rally. And we've seen that over the last at least a good couple of months where the S&P was kind of stalling out into highs, failing to create new higher highs, failing to trend out higher. And at that stage, we started to see the fear index starting to increase. And as we saw the fear index starting to increase, we got that strong tumble over the last couple of weeks. And we saw the S&P drop a decent, 18%, 20% almost. So we used that with that inverse correlation, that divergence that we started to see where the fear index, where the VIX started to increase in percentage, and we also saw the S&P 500 starting to tumble. Now, just on the 31st of March, which was basically the bottom, just about the bottom, if I go maybe even 27th of March, towards the end of March, and that's when the VIX started to peak also. So the VIX started to peak. We saw the VIX come down from around 50% all the way back down to -8, and that's when we started to see capital flows back into the S&P 500. So S&P 500 into all-time highs. We got the stock market into all-time highs. AI tech stocks are doing really well, which we'll break down now. We got Nvidia, we got AMD breaking all-time highs with the confidence behind AI. And I think that's super important to understand is that the investor sentiment right now is leaning a little bit more towards being cautiously optimistic, especially now with Trump coming through with a peace deal. Do we see the markets continue to rally, or do we see a shift in sentiment? Do we see more bombing? Do we see more missiles and drones? Do we then start seeing the price of oil start to rally? I think with the price of oil rallying, it's putting a lot of pressure on inflation, and with the oil prices rallying, it's putting a lot of pressure on companies. Companies have to transport goods. They have to use oil to produce, so with the high price of oil, it's really taking a roll-on effect towards the rest of the markets. So then we also did a quick update just on our portfolio here, S&P 500 and NASDAQ coming out positive. AMD results spark AI stock rally, and we didn't have positions, or at least myself, in AMD or Nvidia, but we have been holding some really good tech stocks, Microsoft, Apple, Alphabet, JSC Top 40, S&P 500, all doing really, really well. As you can see, over 100% on Alphabet. So we're going to be starting to rotate profits out of the AI sector, out of tech sector, at least start partialing out of our positions just to pay ourselves along the way, and then potentially start to rotate, start to rebalance into things that make sense, either staying cash heavy on the side or rotating into different sectors. But I think AI and tech has done a really good rally at the moment. Tesla also up 46%, so did really well there. Let's quickly break this down. Brent, we're down about 13% just off those highs there from $112, $113. Obviously, with Trump coming out with the new peace deal, we want to see, obviously, this has got a pressure on inflation at the moment and a roll-on effect with the rest of the market. So ideally, we would like to see Brent start to stabilize. If it could potentially get below 88 sort of regions again, that would be great. Otherwise, potentially just looking at sort of levels of demand. We've got around 92 regions, becomes attractive for buying power to slowly step in. So if potentially we get a rejection or we get a stall out from this peace deal, then potentially, so if we do get an extension of this peace deal, we could see Brent start to stall out around $92 region. And if that is the case, then we could see some pressure come through and then start seeing volatility trading back into highs. But more in a cautiously optimistic scenario, I think to see Brent start to stabilize, come down back into the 88 regions. And then of course the dollar. Now we broke this down last week where we had these regions at around 97 that the dollar was trading into. Now if we just have a look, when was this? Also end of March, we got these runs above these highs here, and we wanted to see if this was a correction, and if it was, was it a correction into that 61.8 pocket around these levels of demand here, where we extend, we come back, hold now equal lows, and then do we extend now back into these fib extensions here? If that is the case, I think it'll be early signs of maybe the S&P 500 starting to peak into highs. Maybe the S&P 500 starts to slow, more money partialing out the S&P 500, trading back into the dollar. And now with Kevin Warsh stepping in as Fed chair, he might just be keeping interest rates high. And if that's the case, we could see some strength coming through in the dollar. So we'll break that down a little bit more deeper when I jump onto some of the news headlines. But at the moment, the dollar, pretty interesting place at the moment, creating these equal lows here. I want to see, do we sustain above these lows? And do we start holding as support and potentially start rotating higher, get some capital flows and some strength into the dollar? Or if that's not the case, maybe this is just a strong reversal of these highs here. Potentially this is some bearish lower high structure, and this could be an extension if we do break down below the support here, that potentially we see weakness in the dollar. And if that's the case, I think we are going to see some strong rallying from risk on assets like Bitcoin and the S&P. So with that being said, let's quickly have a look at gold. Gold also pretty interesting at the moment. We spoke about on a previous video the way that gold is a safe haven, but it doesn't just react based on geopolitics. Gold doesn't pay dividend, so when interest rates are high, investors do still tend to flock towards the dollar, and I think that's why we've seen a slow decline from gold amidst the geopolitical uncertainty. But I think that might change now for gold, just based on price action, the way we're trading into demand here, the way it looks like we're trying to hold these higher lows. I think it's a pretty strong inflection point. If I just run a fib, take it from the lows into the highs, a pretty nice sweet pocket here, kind of similar to the way the dollar's trading, where we're trading, breaking highs, pulling back into this pocket, holding these equal lows. I think if we do, if we can hold above these lows here, I think we could see potentially an extension into these fib regions here as price targets 5100 from gold. If that's not the case, do we then start seeing a continuation from this bearish move here, where we've got the correction? Is this a potential extension, once again breaking below these support regions? If that's the case, very dangerous position for gold. But I think just looking from a longer term perspective, we got a nice bullish close yesterday, breaking through these structures, holding these support regions here, holding that 61.8 on the fib. I think this could be a positive change for gold. Now, Bitcoin. So if we just had a look once again last week, we were trading, running these highs, these previous monthly highs, previous yearly highs, and we created this top here where I built up this thesis that as long as interest rates were high and the dollar was strengthening, that could be some pressure coming through from Bitcoin. Now, yes, we did see a nice drop lower. We were trading, broke through these lows, but we immediately stepped back above and started to trade out higher. And that could be in alignment with that drop from Bitcoin, where Bitcoin bounced off that support and then came back for the second bounce. And we saw that reaction come through of Bitcoin, where as dollars came through for that second bounce, we saw in that move down for the second bounce that Bitcoin started bouncing out higher and now kind of correcting and trading out higher and just kind of stalling with slow grinding price action. So at the moment, failing to look for any good opportunity to try and get positioned here on Bitcoin, trading into highs, but no real good structure to get positioned off of. If we jump to the weekly quickly, I mean, looking pretty decent trading off of this level of demand, and we do have quite a bit of range to trade into off into the next supply region, significant supply region around 90k. So I think kind of tricky here, just kind of sitting on the sidelines of BTC at the moment in terms of like any leveraged positions, but we are seeing some strength come through, at least from once again that end of March sort of region where we got that pivot. So I want to see, do we get potentially a intra-week pullback from Bitcoin where potentially we could set up with some structure and get like a continuation position to come through, or is this once again slow grinding price action stalling off into the highs and then getting a rotation lower and potentially seeing Bitcoin back below these strong key levels? If that's the case, cool, but I think long term Bitcoin, we do have some region to trade higher. Not the best price action, but we are getting some strength, and we do have some region to at least trade down into that 86, 87 mark, and then potentially even into the 90k. And if that's the case and we get some strong momentum, potentially a Fed pivot, we could see Bitcoin bull run come back again. Now, in terms of AMD, strong, massive, and we had this headline coming through here. If I just quickly jump to where was it? Yeah, AMD stock surges as the chip makers forecast continued AI growth. Let's quickly have.
Actually, I don't know.
Look at the chart. That's what I'm saying.
Read. Right? And by a few I mean two. Basically saying that the CPU was, we talked about it back and forth, right? And lo and behold,
And there were skeptics.
there were.
Yeah.
There were. And you know what I say to that?
Mm-hmm.
Nothing. I don't know.
Look at the chart. That's what I'm saying.
Read the
Read
results.
Hallie and look at the chart.
Read it in a week. I mean, yeah, they actually, they completely blew it away. I think what was the number that Lisa Su said? 70% growth in Q2 is what she's expecting out of their CPU server side of the business.
So just out of the CPU server side of the business, they're expecting 70% year-on-year growth. That's massive.
70% year-over-year growth. They also said that they were going to see annually, they were expecting 18% growth over the next 3 to 5 years. That's now jumped to 35%. And so this is just part of this whole push to agentic AI, where you're seeing these systems perform tasks that CPUs are good at. And so naturally, CPUs are going to become more important.
Very, very bullish for AI, for tech. Naturally, computer companies, CPU generation companies are doing really well, and we're seeing that come through. So obviously, not FOMOing into AMD at the moment. Even NVIDIA, looking really, really bullish, kind of breaking out of these corrections here, where we saw price into highs, we saw price slowly start to stall, build up that correction, now getting the breakout. AMD potentially has a bit of range to trade out higher. Not really part of my investment strategy at the moment, but looking really bullish overall from these tech stocks. Now, in terms of the Fed balance sheet, if AI boom drives spending, but not really productivity, what can we expect? Now, obviously, we spoke about Kevin Warsh stepping in, what impact this could have on the markets, and let's quickly have a listen.
Monetary policy, he believes in fiscal policy, he believes in the separation of policy. I think where you'll see some interest in Kevin that we haven't really talked about much is Kevin is not a big fan of the balance sheet of the Fed. So I think...
So I think quickly, if you just have a look at the Fed balance sheet, where we saw here, where we had a strong level of quantitative tightening that we had since around 2022. So this is potentially an early sign of QE, where the Fed's buying bonds, putting money back, flowing into the economy. If that's the case, I mean, we could see a end of QT now back into QE, but obviously we're still in that phase of QT where the Fed's tightening its balance sheet.
That people should think about liquidation of the balance sheet, how that works, what the process will be. I wouldn't be surprised if Kevin sped up that process. But on the other hand, Kevin clearly doesn't want to drive interest rates higher. So I think Kevin will be as aggressive as he could possibly be in selling the balance sheet.
It's quite interesting. He says Kevin doesn't want to drive interest rates higher. Interest rates are high at the moment, but cutting interest rates now would lead to what we call stagflation, which will then just put more pressure on inflation. So I think the Fed's in a pretty weird predicament at the moment where they're too scared to cut rates too aggressively because of inflation, but they also don't want to hike rates too aggressively.
Out affecting the market. The number two thing I think he'll do is he'll spend a bunch of time getting the Fed back to its core basic fundamental views. For some reason, the Fed for the last 8 years got involved in what you would consider non-traditional Fed activities. The Fed is probably not supposed to be talking about climate policy. It may be important. I'm not diminishing climate policy, but it's not really in the Fed's mandate.
So pretty interesting macro view all around here, pretty interesting times we're in. I think at the moment we're all just waiting in anticipation with the Trump and Iran situation, what impact that will have on the price of oil, what impact that will then roll over onto the level of inflation. We can see from the VIX that the fear in the market is pretty neutral at the moment, and that's why we're seeing risk on assets like the S&P 500 and tech stocks doing really well, especially in this boom of AI. And then just to end it off, we've got the SpaceX IPO, which will be volatile, says ARX Invests Kathy Wood. So also waiting in anticipation for the SpaceX IPO. I think we can break that down in a whole nother video. For now, just a super quick recap. Tech stocks, S&P 500 into highs, BTC kind of building out that bottom and slowly grinding out higher just off that intra-week time frame, potentially seeing for some potential buying opportunities if we get back into that 80K mark. Gold looking like it's bottoming out a little bit, potentially to move out higher. Vice versa for DXY in a pretty strong level of support now. Do we break lower or do we break higher? If we break lower, that could be bullish for risk on assets. And I think that's it for the moment. So waiting in anticipation, I think this is the main headline at the moment. Let's give it around 24, I would say 48 hours to get a response, and we'll take it from there. See you guys soon.